Okay, those were the top headlines that shaped up the day of trade on Wednesday, and here's how we did in terms of levels. The Nifty 50 ended with cuts of about 0.5%. 24,200 is where we shut shop. Sensex also lower by about 0.2. It was Nifty Bank that lost some steam from the day's highest point, but nonetheless ended with gains of about 0.5%. And the small cap index also did wonderfully well for itself, managed to hold on to those 0.6% higher gains. However, Nifty mid cap fell quite steeply from the day's highest point to end absolutely flat. Sectorally too, it was a mixed bag because while you had metals, PSU banks, finance, banks, pharma do well, on the flip side, you had some massive pressure coming in from Nifty IT. That index was lower by 1.5%, followed by 1% of a cut in FMCG, led lower by realty, auto, oil and gas, energy, with Nifty Defence too seeing cuts of about 0.2%. The broader end of the market, for the most part of the trading day, we did well with the favor towards the advances, but towards the day's end, that too changed, and the Nifty 500 too lost some steam from the day's high. We've ended exactly even Steven with about 250 stocks both in the green and the red each on the Nifty 500. The biggest cuts came in from names like Varun Beverages. They announced their Alcobev foray with no concrete plans ahead and limited announcement from their end, and that is something that the brokerages were very cautious about. Tatacom grow on the back of block deals, Jubilant Foods, Premier Energies, Allied Blenders. These were some of the top losers. On the flip side, SPFC Finance was higher by 9.25%. Jindal saw strong volumes over there. IDBI Bank, Scient on the back of that FY31 growth roadmap that they've laid out for themselves on their investor day. 7% uptick over there. Capri Global too, very strong volumes, 6.5% higher over there. But while that was all the action that we saw on the street on Wednesday, here's everything you need to be watching out for and keeping on your radar for Thursday's day of trade. And Sunidhi is joining us with that list.
Here are the cues to watch ahead of the upcoming trading session. Starting with India, we have the markets watching the monthly Sensex expiry. Moving on to the global markets, in the United States, we have investors which will track wholesale inventories and initial jobless claims, while China is all set to release the industrial profits data. In terms of lock-ins, the lock-in period for CleanMax Enviro Solutions ends, covering around 29% of the shares. Moving on to the IPO space, Luminos Industries will open for subscription, while Skyways, Air Services, High-Tech Engineers and Symbiotic Pharma Lab will close their IPOs. And finally, moving on to some other events, the ECB is all set to publish the account of its latest monetary policy meeting, which could provide further clues on the central bank's rate outlook.
Okay, so that's everything to watch out for and keep on your radar. Of course, the global cues that we are going to get from the US as well in terms of GDP, PCE and Nvidia earnings, the street will also react to that back home. But like Sunidhi was mentioning, Thursday is going to be on the watch out for all of us because it's going to be the first monthly Sensex expiry that will be at play after the cash session has been introduced. Let's try and understand what the trade setup for Thursday could look like, and we've got Mr. Laxmikant Shukla of Yes Securities India joining us on the show. Laxmikant, hi, good to be speaking with you. You know, we've seen lots of pressure build up on the street in the last few minutes of trade on Wednesday, 0.5% cut coming in. Do you reckon this pressure could sustain for Thursday as well? Because remember, on Tuesday, while the street was anticipating to see heightened pressure on account of the Nifty expiry, the last half an hour we saw a complete trend reversal and we ended positively. Wednesday has seen some deep cuts. How do you think Thursday will pan out?
Hi, good afternoon, Snehi. Thank you for calling me on your show. So you are right that yesterday we have seen a good rebound from the lower level and Nifty has made bullish engulfing candlestick pattern. And in today morning, we were waiting for that follow through buying momentum, but that could not happen. And we have seen is low around the closing levels during the cash segment. So I think this consolidation will continue, but I would like to say that structure has improved a little bit because we are continuously trading above its key support levels of 24,000 from last few sessions. I think till we hold these levels, we could expect this upside breakout, and if we will get that follow through buying momentum above the levels of 24,400 where it's 20 DMA is placed, I think that would be the vital trigger for the Nifty. If it surpasses this level, after we will see that our market could regain momentum on the upside and we will see higher level on the upside toward the zone of 24,600 to 24,800 zone. And if we look at the Bank Nifty, so Bank Nifty also seen a rebound in today's session, but when it reaches around the levels of 58,000, so I think due to that falling trend line which has been coming from the higher levels, so that has hindered that upward move, and we have seen some sort of profit booking. But I think if we look structural wise, Bank Nifty has been making bullish head and shoulder pattern, and we are waiting the breakout of the levels of 58,250. Once that trigger will happen in Bank Nifty, I think we will see positive momentum in Bank Nifty also. But broader market fairly played well. We are seeing outperformance from the small cap as well mid cap. I think that will continue to take place until we see any major breakthrough in both these indices, Nifty and Bank Nifty.
Those are some of the levels that we're watching out for at the index level. Laxmikant, what about some stock-specific recommendations amid a market that's so volatile on a daily basis? Which stocks look good right now?
See, even market is volatile, but we could find traction in some of the sectorial space. From where I have picked two recommendations. First one is Cochin Shipyard, and for last 2 to 3 days, we have seen some positive momentum in defense space. And if we talk about Cochin Shipyard, it has given a range breakout above its 200-day SMA while making higher tops and higher bottom. It has also surpassed its previous month swing high around the levels of 1,540 to 545 kind of range. So I am expecting the target of 1,650 in Cochin Shipyard while keeping the stop loss of 1,495. So till it hold this level, we could see positive momentum in Cochin Shipyard. And if we look at the metal indices, metal index, so it has also played fairly well. It has surpassed its previous swing high. So I think from there we could see some positive momentum. So that's why I have picked one stock from metal space, that is Vedanta. So Vedanta is struggling so hard from last few sessions. It was failed to provide any follow through buying momentum, but in today's sessions it has surpassed its previous swing high. It has given consolidation breakout above the levels of 280, and then after we have seen a consistent formation of higher tops and higher bottom on the hourly chart. Still it has given close above the same. So I think that positive move will continue in Vedanta also, and we will expect the target of 296 with the stop loss of 279.
Cochin Shipyard and Vedanta, these are the two stocks that are looking good to you. Lakshmikant, on that note, also want to get your view on Nifty IT, a sector that was highly under pressure on Wednesday. And the cuts that we've seen on names like an HCL Tech, LTIMindtree, would that warrant a good entry price for any of these names? Or would you still adopt a more wait and watch sort of an approach?
I think some uh, some more days we want to see how Nifty I think will play. Actually, we have seen good momentum in previous month, but when it reaches its long-term moving averages, then after we started facing selling pressure in Nifty IT index. But I think if we avoid those large cap names like Infosys, TCS, and SCL, we could see some traction in the Nifty mid-cap IT space like LTM and Coforge and emphasis, where we could see a positive momentum. Talk about LTM. So LTM has recently seen has given recently good upside move, and still holding above its long-term, short-term moving averages. So I think till it hold up the levels of 4,380 on the downside, we will see a pullback move in LTM toward the levels of 4,900. And if we talk about Coforge, so Coforge has also given a good positive move on the upside. Recently, it has also surpassed its previous week swing high, so which is showing positive sentiment. Although in today's sessions it has seen slight profit booking, but overall the structure looks bullish till it hold up the levels of 1,850, and holding these levels, we will see continuation of this pullback move on the upper side. Near term resistance hold around the zone of 1900, surpassing the same. It would maintain its upside journey toward the levels of 1,950 to 960 kind of range.
Understood, and those are some of the picks coming in from within the mid-cap IT space. Laxmikant, on that note, thank you so much for your time. Good to be speaking with you today. That viewers, time to slip into a very short break on this edition of Market Edge. Before we do that, here's a little bit of a glimpse of what's coming on the other side. The theme of the day, of course, on the show is platform companies. Do they have more room for growth ahead? We're going to be trying and decoding this with Mr. Vineet Bodhankar, who's joining us from Ventura Securities. Remember, Ventura has recently come out with a buy initiation on Meesho as well. We'll try and understand the rationale behind that, the growth runway that the brokerage sees ahead of that as well, and what is the outlook on expansion beyond core businesses for these companies and the competition risk that comes within the new age company segment and monetization. All of this and much more in conversation with Mr. Vineet Bodhankar of Ventura on the other side of this very short break. Back with Market Edge, and let's jump straight to the conversation on platform companies. We've got Mr. Vineet Bodhankar of Ventura Securities joining us on the show. And the latest note coming in from Ventura Securities is a fresh buy initiation on Meesho with a buy rating and a target price of 278 rupees per share with a time horizon of 24 months, implying a 35% upside. Vineet, hi, welcome to the show and good to be speaking with you. And before we talk about platform companies and your outlook on them at large, let's start by decoding this note from Ventura on Meesho. What's driving this confidence on Meesho? Talk to us behind the rationale of this buy rating, because Meesho, as I understand, is still a loss-making company on both your operating as well as bottom line levels. What's driving the positive rationale here?
So, what we believe is that they've got a completely differentiated model, and which is a zero-cost commission model with massive growth in your, order bookings that are happening. And as the business grows, we expect that, the cost will further come down for sellers setting up a virtuous cycle. And most of their business is coming from value-added services. So even their, logistics platform is a value-added service platform. Along with that, they have advertising, content, commerce, and financial, structuring. So all these are very, very good prospects for the company. We believe that the company is going to, in terms of net revenue, go from around 12,600 odd crores that they clocked in FY26 to about 25,000 by 29. And their EBITDA is sharply expected to turn around in FY28 to about 112 crores and eventually scale to about 1,400 crores as per our estimates. And profitability is expected to zoom from a negative 1,300 crore kind of loss, which it currently has, to about 1,700 crores. EBITDA margin should be in FY29 at about 5.5%, while net margins would be at 6.7%. Currently, which are in double-digit negative as of today. So what we are expecting is a very sharp turnaround in performance because the operating leverage has started kicking in. And this company, in our opinion, valued at 55 times on FY28 or 29 in FY29. I think it's very, very reasonably valued, and you will get a good, handsome upside from here. And given the fact that it scores massively in terms of orders and penetration levels on internet also, I think this stock is well positioned to grow very, very aggressively and become a dominant player in the fashion industry.
Okay, that's the take coming in on Meesho and the bullish outlook behind the company. Vineet, I'm just trying to understand, how confident are you on Meesho's value mode? How defensible is that against other players like in Amazon, Flipkart, and the quick commerce push that's coming in from Flipkart Minutes? I was just reading today that Flipkart Minutes has overtaken the dark store count of Swiggy's Instamart as well. Where do you think within the value chain is Meesho, and how are you looking at the broader space?
So, their order frequency pickup is almost 6 times that of all the other e-commerce players. And the fact that they have a zero commission model makes it a very, very a compelling proposition for all the, incumbents who are operating on their platform. So I think it's a very, very formidable moat that they have. And we think that this is a very sustainable piece uh, that should hold the test of time.
Okay, understood. Moving away from Meesho and just looking at the broader sector of platform companies, Vineet, talk to us about which ones you like the most. Is it players who have now been here for some time, like an Eternal, like a Paytm or PB Fintech, or are you also looking at something like a Lenskart from a bullish lens?
So we like Lenskart. I think Lenskart is going to be another one which is going to do well. Apart from that, we also like Nykaa. So we think that among the fashion industry, I think Nykaa is another company with an extremely strong moat, and that should also do well. Other companies which we have, initiated on is Paytm. About a couple of years back, at that time the price was about 450. Today, we are inching at 1700 plus. So, we are quite bullish on these four stocks that I spoke to you about and think that they will do very well, given the fact that the other, platform companies like Swiggy, Zomato, and PB Fintech have performed. So we think that these are business, these are a suite of stocks that we like a lot. And all these platform companies should do very well. And in line with these, I don't think that Meesho or Lenskart would be anything different.
Okay, understood. So overall, very bullish view coming in on the sector. Vineet, I'm just trying to draw parallels, right? When Nykaa got listed, it faced a lot of competition from other unlisted players like Atira and other players as well in the BPC space. Now with Zepto's listing upcoming, we understand that IPO valuation has been trimmed and there is a delay in coming to the street. But do you think that Eternal and Swiggy stand to be materially impacted once Zepto's listing goes through?
I don't think so. There's enough and more because there are a couple of more players who are vying for the mantle. So you have got Flipkart coming in, Amazon is also trying its hand, and Rapido is also doing it in their own small way in the test marketing. So there are a number of players who are looking to get into the QC space, and and the market is only expanding. And when these players get in, also we expect that the market will expand significantly.
So that's your outlook coming in. And lastly, Vineet, wanted your view on Policy Bazaar as well. You've briefly touched on that, PB Fintech. What is the view when it comes to this company? Because pioneer in the insurance platform space, but what do you think the growth outlook is like over here?
I think, it is with its content engine that they have clearly created a niche for themselves. And it's a steady compounder from here on. And insurance penetration is abysmal, even as we speak now. And it's only going to get stronger and deeper. And I think PB Fintech will definitely benefit from that. So we believe that PB Fintech is a very steady compounder compared to the other, stocks that we just spoke about.
Understood. Vineet, I wish we had more time to try and decode into companies like Car Trade. We've seen a management resignation also coming in earlier in the day, but maybe that for another time. Thank you, Vineet, so much for your time. Due to paucity of time, we'll have to end this conversation here. On that note, viewers, I'm afraid we're completely timed out on this edition of Market Edge. From everyone who put this show together, thanks so much for tuning in. And of course, keep watching ET Now for more news and updates.